This is a podcast from the Business Times.
You can call me curious or busybody. One good thing with having public listed companies is that such companies generally share much more information on their operations, performance, and strategy than privately held businesses. Welcome to PropertyBT, a podcast series by the Business Times. I'm senior correspondent Leslie Yee, and I'll be your host as we gather insights on all things Singapore property to help you in your property investment journey. Today is our lucky day. We have a unique chance to learn about the operations and strategy of a leading privately held property group, CapitaLand Development. CapitaLand Development is CapitaLand Group's development arm. It has a portfolio worth 21.6 billion Singapore dollars as at end March. Its core markets are Singapore, China, and Vietnam. A warm welcome to Jonathan Yap, Chief Executive Officer, CapitaLand Development.
Thank you, Leslie. I'm not sure it's necessarily a lucky day, but I'm very happy to be here.
So what has surprised you in the Singapore property market thus far this year, and how will the next 6 to 12 months play out? What is your appetite for housing sites?
Rather than say surprise, I think probably what stood out for me is that we can actually see a more discerning market. The en-bloc sale actually have slowed down. We saw transactions that did not happen. And therefore, as a result, we also see more transactions also happening as far as government land sale is concerned. Partially also because, I guess, the supply of GLS site has increased. And we saw bids, or rather we saw sites which have got very few bids. In fact, in some cases, only one bid. And first time in about more than 10 years, we actually have got tenders where they end up with no award. So it definitely signals a more discerning market. And in terms of pricing, we start to see pricing either at the lower end of market price expectation or alternatively, sometimes even below market price expectation. So that again is pointing to the same direction. What we actually see now is probably instead of just that, it's really a point that is rather than due to increase in population, what is driving demand is probably change in lifestyle. But with that said, the choices that buyers make today are going to be a lot more specific, more personal, not just pricing, but also perhaps the location. So therefore here, I think that's where the selection of site, as well as the design and the execution of the housing projects become more important. But with that said, we're still very active and optimistic of the market.
Jonathan, I guess you referred to the fact that, participation in land tenders has been relatively weak, but it is great that developers like yourselves have taken on new housing sites, right? So this is in spite of high interest rates, high construction costs, uncertain housing demand. All these factors, do they worry you?
Of course. I mean, we are a commercial entity. Of course, we look at bottom line. It concerns us because ultimately, all investments that we make, it comes with a certain risk. So therefore, it's how do we price in those risks? So if its interest cost is high, we just have to make sure in our underwriting, we price in interest costs. Likewise, if it's a commercial or retail property, then we have to price in perhaps the catchment, the buying patterns, and purchasing power of the location.
Interesting. Yes, all about pricing in the risks that we see, right? So your group is also very active in the office and retail property segments in Singapore. Jonathan, what are the prospects and challenges for the office and retail property segments in Singapore?
Yeah, indeed, I guess let's touch on the office first. I mean, indeed, work from home does change the way how office is being demanded. I think office is no longer the conventional place where you just work there. It's really a place where people collaborate. So while it is true that we have seen some tenants actually give up space, we also see some tenants actually increasing the requirement. What we actually see in the market is the market start to become a two-tier market. There will be a group of the market that's still performing well. These are effectively well-located, well-specified office space. And the occupancy that we see there is still very high. And on the other hand, we also start to see some older buildings, perhaps not as appropriately located, where we see vacancy creeping up. In terms of retail space, I do think suburban and perhaps central's retail space, they behave a little bit differently. Obviously, suburban, they had the benefit during COVID of people working from home. So therefore, as a result, people were, during daytime be in a mall where previously it might not have the opportunity to do that. So there is that fundamental demand. But now I guess as more people start to return to office, in fact, we do see that as you drive on the road, you can see that actually these days the road is packed. So that's to me is signaling of people going back to office. Orchard Road or central area, then I think it's a little bit different. Then I would say increasing tourism, obviously that helps. It does bring people there. One strong argument for both office as well as retail is this new supply of land is relatively more controlled compared to, say, residential. So that in a way, it gives a certain underpinning as far as your demand and supply is concerned. Just like how we mentioned that residential buyers are becoming more discerning, I think similarly, office and retail tenants, because of underlying demand, are also becoming more discerning.
Indeed. So I suppose it is the quality of the malls and the offices that could differentiate their performance. I think you referred to the fact that the roads are getting busier with more people heading back to the office. Also, if I may, Changi Business Park, supposed to be the CBD of the East, is emptying out with vacancy rates supposedly at 40% as some major tech companies downsize. What's your take on this?
As far as Changi Business City, I think that one's a little bit a more complex situation. But really, I think that's also a function of perhaps how Singapore, or rather that location, changed because of the readily available employment passes and all that. So I think the demand supply there, it goes beyond just a function of whether it's work from home, but also right down to, I guess, more national consideration. So we do have, for example, office building in Changi Business City, which is still very well occupied. But of course, on the other hand, there will be spaces that have been given up previously because people don't actually have the employment passes to work here. Then we need to basically work on finding new tenants for the spaces.
Let's now talk a bit about your mega bet on the Jurong Lake District master developer site. The consortium of CapitaLand Development, City Developments, Fraser's Property, Mitsubishi Estate and Mitsui Fudosan was the only party to have put up their hands to take on this site. This project will have a long gestation period. Jonathan, what is the risk and reward for the Jurong Lake District master developer site? Will Jurong work as a key office destination with rents that match the CBD?
Clearly, it is a new location. It's an area where demand is not well established. And, this whole decentralization is not a new concept. Clearly, the planning authority does want to push decentralization for distribution of traffic and a whole host of other consideration. But you're absolutely right. It will be a long gestation project. It's actually not a conventional GLS where typically you just kind of go plot by plot. Then you kind of, in a way, price or underwrite based on the individual plot. So therefore, the risk we have to take is higher. But on the flip side, the opportunity is also more interesting because now it's not plot by plot. You have a whole 6.5 hectare of space. Now we can decide how to plan the different uses within the project in a more seamless manner. Indeed, it's a new way of approaching urban planning in Singapore, and that's something we're very excited to basically work with the planning authority to execute it. That's assuming if we're awarded a site. Now, and the reason why we actually have 5 of us coming together is absolutely for the same reason you articulated earlier, because there are obviously risks that we need to underwrite. So collectively among the 5 of us, we bring more than 300 over years of operating experience, more than 300 billion worth of asset under management. And when we look at that project, obviously we need to price appropriately. But fair to say, we are excited about the opportunity, so much so that we actually submitted 2 proposals with slightly different approach and scheme.
What kind of office tenants do you think will be attracted to the Jurong Lake District site? And do you think that the rental there will be sort of on par with CBD, 20% less? What kind of number are you looking at? And overall, you're optimistic about this project, but do you see it giving returns on par with, say, a traditional residential project?
Let's go piece by piece, right? So you have the leasing piece, which is your office and your retail, as well as your residential for sale piece. As far as the leasing piece is concerned, clearly it has to charge a rental that's lower than CBD. We mentioned a little bit about the 2-tier markets, especially with tenants today focusing more and more on sustainability. The question would then be, would there be enough stock within CBD that potentially can meet the sustainability as well as the new space requirement that users today expect? So therefore, as a result, we do see that a group of customers or tenants that will want, as office tenants, would basically want to be in office space that meet that new level of space requirement. But at the same time, they may not need to be in CBD. Therefore, they can afford to be somewhere else, perhaps at the rental that's lower than CBD and perhaps potentially less congested than CBD as well. Now, in terms of retail, in terms of, say, service residents, the other supporting amenities will be largely driven by how well we can bring, obviously, the residential crowd as well as office tenants in there. If we're able to bring there, then they'll be able to basically have a group of people that they can support and therefore make a business out of it. As far as residential is concerned, we have tested Jurong. We launched Jayden last year. I would say we are very pleased and very thankful for the strong response buyers gave to the project. And we do think over time, if we launch residential in a sensible manner, I think that is something that will be helpful to us as far as our underwriting is concerned.
Indeed, maybe there's something special about Jurong. From swampland, it became a keynote of independent Singapore's industrialization. Today, Jurong bustles with many homes, offices, manufacturing facilities, and so on. And there may be more to come, should Jurong Lake District establish itself as Singapore's second CBD. Still to come, what keeps CapitaLand Development CEO awake at night?
The Business Times podcasts. Relevant, incisive, compelling content by some of the newsroom's most respected correspondents in markets, wealth management, and current affairs. Available on all your favorite audio content apps and at www.businesstimes.com.sg/podcasts.
And now, back to PropertyBT from the Business Times.
Welcome back to PropertyBT. I'm Leslie Yee. Let's look beyond Singapore. China is a core market for CapitaLand development, but economic growth is slowing. Crucially, there's a major housing crisis. People have lost confidence in buying homes and are generally much more cautious in consumption. Is China still investable, especially in the property sector? Jonathan, what do you think of the property market in China? Will you do more in China?
Clearly, I guess China is a market that has a prolonged period of strong growth. Even on the property sector front, from our perspective, China is still the world's second largest economy. And I do think what we see now is probably part and parcel of the market adjustment that China and the rest of the world probably would need. And I'm not going to be so naive as to think that things will be hunky-dory. There will be adjustment that we need to make, that we may have to pace our investment differently. But at the same time, my long-term confidence for China remains. We've been there for, in fact, this year's our 30th year in China. So we actually have projects that have got multiple phases, and therefore that is something we're focused right now. As to whether we'll make new investments beyond what we have right now, I guess it will depend on how things unfold. And we can see there are many attempts by the Chinese government in pushing out policies. And that's something we have to monitor as we go along, like all investors would for any market.
Jonathan, I guess you have referred to the fact that the Chinese government has unveiled various measures to support housing demand. Recently, it's even buying back surplus housing inventory. Do you think the government is doing enough to end the housing crisis? And when will this crisis end?
I guess if anybody can crystal ball when it end, I guess we will not be doing this podcast. We'll probably be someone else busy doing something else. But what I obviously can say is that at least it's getting the attention of the policymakers. So they actually are trying to make an attempt to see what can be done, how else can be done. I think that's definitely an effort in the right direction. I don't think it will be resolved quickly, like over the next 1 year. Probably not. But will it go for a long period without any real attempt? I don't think so too. And historically, real estate has taken a big part of China's GDP. So not having that functioning at the same level as before, I would imagine must be something that the policymakers there are thinking of.
Well, closer to home economists are generally rather positive on ASEAN. Populations are young in some major ASEAN countries, and ASEAN countries are rapidly moving up the economic value chain in many areas. Jonathan, why among ASEAN countries are you focused on Vietnam? How is the Vietnam business progressing, and are you looking at other new geographies?
I would say our Vietnam business is going from strength to strength. It is a market, exhibit many of the attributes we mentioned earlier. Young population, it has got basically good solid base, and it is also one of those markets that benefited this whole China plus one strategy that some manufacturers are undertaking. But as of now, we're actually executing largely residential projects. And we are going to launch projects both in North Vietnam as well as South Vietnam that are a little bit bigger compared to what we've undertaken previously. We do see local buyers having the need for a home, either for their own stay or for investment. At the same time, the supply probably was a little bit more muted in the recent times. So therefore, in terms of supply and demand, we do see that pointing in the right direction. And therefore, we are confident that we will do more in that market. Whether we do go beyond our current 3 core markets, i.e. Singapore, China, and Vietnam, the short answer is yes, but we are currently still studying a few markets. Might be a bit too early to give specific as to which market and what sector.
Okay, I guess being a business leader can be exciting. You make important calls, you're in multiple geographies, then you're well remunerated. Still, I think there must be tons of issues that give you grey hair. Trends such as deglobalization can be extremely worrying. Jonathan, which among high interest rates, climate change, rise of artificial intelligence, and geopolitics worries you most, and why?
I think all those you have mentioned obviously are areas that we need to pay attention to. I mean, interest rate is obvious, right? Clearly it's high. It means that we have to price in the high interest costs. We also have, not just in terms of when we execute, but also in terms of the returns that we expect. You mentioned political tension, but that's a harder one to price. We can hedge interest costs, but you can't do likewise for political risk. But that's where we need to then make a judgment. So compared to interest costs, I would say political tension is a harder one to underwrite. That's why we choose few markets, but we want to go very, very deep in those markets in executing our development investment. Because clearly, as a developer, we do need to go very hands-on to ensure that we have the right people on the ground to be able to not only deal with the day-to-day, but help us to read the market based on what we can see in the market and price in whatever we price in our investment. AI, I see it's just something happening. So clearly, in fact, there's going to be benefits to be reaped too, right? At some point, probably all of us can use AI to make our work more productive and more efficient. So we just have to basically design and plan for it.
Jonathan, I guess lots on your plate and lots to worry about. So do you sleep well or have many restless nights?
I generally sleep all right. But of course, there'll be things that we think and worry about. So I guess that's where we go back to how can we deal with those issues? And it's not like me dealing alone. We have a team of people. I think it's important in this time of the world, right? So I think here it's all about having a team of people that will be able to work together. And of course, in like any team environment, we need to make sure we have a culture and a mindset that encourages people to speak up in a respectful manner, and so that we can harness the collective wisdom that the team presents among ourselves.
The power of the team. Jonathan, I wish you well as you confront various challenges and chart a way forward for your business. Singapore may be a little red dot. However, some of our local developers have shown they can build great developments at home and abroad. Thank you to my guest, Jonathan Yap of CapitaLand Development.
Thank you, Leslie.
That's it for PropertyBT this time. Join us next time, where we take an in-depth look at the property agency landscape here. Is there an oversupply of property agents? Are sales commission rates too high? Are property agents providing value-add services, or are some contributing to market distortions? I'm Leslie Yee. Thank you for listening, and happy property hunting.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts. Or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.